Gold prices surged to a new all-time high above $2,180 as yields on 10-year U.S. bonds fell to 4.04% following U.S. non-farm payrolls (NFP) data publication. In contrast to expectations, the unemployment rate rose to 3.9%, whereas the non-farm payrolls for February exceeded projections by 275K at 275K but remained below the previous estimate of 353K. The inflation outlook is anticipated to moderate due to the slower-than-anticipated growth of average hourly wages. The monthly wage increase is marginally 0.1%, following January's 0.6% increase. Investors had anticipated a halving of wage growth to 0.3%. The annual rate of wage growth decelerates to 4.3% from the anticipated 4.4% and the previous estimate of 4.5%. The revised figure for January is 4.5%. As a result of sluggish wage growth and high unemployment, selling pressure on the US dollar has intensified. A week ago, the US dollar index, DXY, a metric used to compare the strength of the US dollar to 6 prominent currencies, peaked at 102.40. A prolonged bullish trend, supported by rising moving averages, provided a huge gain for gold USD bulls. As a result, the price broke previous highs and reached a level not seen before. In this context, the overall market trend for gold USD will be bullish until a bearish exhaustion appears. Meanwhile, any intraday dip could be a long opportunity in this pair, targeting the 2200.00 level.